What's up, you guys? Zoe here from OneGlanceTrader.com, and welcome to part 4 of my $500 account challenge, where I'm trading put credit spreads on Tesla. And the goal of this challenge is to grow this $500 account as fast as I can while maintaining a good level of risk management. Now, if you guys are brand new to this series, you can click the link down below, which has the full playlist, which goes through episodes 1 to episode 3, and I go into more detail about why I've created this challenge, why I'm utilizing put credit spreads as my options trading strategy, and more about how put credit spreads work and why I've also picked Tesla as well. So if you're brand new, check that one out below. So in this particular video, we're going to go through firstly the P&L. So I've placed my fourth trade a couple of days ago, and probably 3-4 days ago once this video comes out, and I'm going to give you a full rundown of the P&L. I've now added in commissions, so we've got a running cost of commission, so we can see my full return as time goes on, because a couple of you guys have commented that I'm not including the commissions in my overall ROI, so I've done that as well. And then what we'll do, we'll break down trade 4 and also look at TradingViewer, what's been going on with Tesla. And for those who've been following Tesla over the past couple of weeks, as with the whole broader market, which has been down, um, Tesla has also been down, but has picked up over the last 2 trading days, and that allowed me to roll my third trade into my fourth trade, um, and again for a net credit, which you'll see as well. So let's get into it. So this is a brand new slide that I'll be keeping, and this will be the first slide that I kind of show after the title slide moving forward. So to break this down, we've got the trade. So we've done 4 trades, and the last trade was done on the 23rd of December, and I'll be breaking down trade 4 in the next slide. What was the total net credit or debit received? And as you can see, every trade I've managed to pick up a credit, even though that Tesla has been, down over the past few weeks, and I was still able to roll out for a credit as well. So part of me was thinking a week ago when I was trying to roll out this trade, and we'll talk about it more later, is that I was happy to roll this out for a net debit. So i.e. I would have to pay money to roll this trade out for like $10-20. But fortunately, Tesla, as I said, had 2 good days, um, and and I was able to roll up for another credit. So brand new, as you guys were mentioning in the comments about commissions. So we've got the commissions for each trade, and then we've got the net debit or credit based on the credit minus the commissions. That gives you that total there. And then what this does, gives you a running percentage of my initial $500 investment, because each trade I am doing $5 wide strikes, and we're talking about one contract, so that's 100 shares. 100 shares at $5 times by 5 equals the $500. So as you can see, when Tesla, this is a bullish strategy. So when Tesla is going up, I'm able to make better premiums. But as Tesla goes down, and I'm a bit further out from the money, I'm making less percentage returns. But even to make 5%, when did I placed my last trade on the 2nd of December, and my fourth trade 20 days later, to still make 5% return, I'm still not going to complain with those with that aspect there. And as I mentioned in the first episode, my aim is to make 10% on average for each trade that I do. So if we look at where we are overall since I placed trade 4 a few days ago, we have made $210 of credit with around $9.50 in commissions. That gives us a total net credit of just over $200, which is a 40% return on my initial $500. So if we go back to 10% on average per trade, I was slightly ahead of that before trade 4, but now I am pretty much on par with where I needed to be to make 10% each. So over 10 trades, in theory, I would have doubled this account from $500 to $1,000. So at the moment, I am absolutely Faberglass did them fantastic, and really appreciate of how I've done so far in these 4 trades. Yes, my percentage is dropping slightly, but that's down to the market conditions of Tesla. So, but there's still enough volatility in there within Tesla to achieve these premiums. Again, I talk about it more in the first part of why I choose Tesla, but one is the volatility of Tesla, which allows me to make 5 to 13% or 15% returns per trade. So a lot of you might be thinking that I'm risking the whole $500. I am in theory, because I can lose $500 inside each trade. However, in saying that, with the concept of how options work and rolling options, which is what I've been doing, so what I've been doing is I've been closing out the open trade and opening a brand new trade for a net credit. And the next slide will go through that example of how I did trade 4. So let's go on to that now, so you guys understand that in a bit more detail. So for those who remember, in part 3 I had a 1005 put, and I sold the 1005 put, and I bought the 1000 put as protection. So the difference between 1005 and 1000 is a $5. So they're $5 strikes, and they were expiring on January the 7th, 2022. So that was trade number 3 that I put on. And then what I did was, as I mentioned, is I bought back that option. So I bought back the 1005 and I sold the 1000, which cost me $164. Now, at the exact same time, so this is a 4-legged trade, options trade, and your broker kind of sorts all this out for you once you've decided on what strikes that you want, and what price you want, what limit price you want to be filled at as a collective. What I did is, because Tesla at this point was above out the money, so was above 1005, and I was quite happy with the 1005, 1000 kind of strike level. I opened a brand new trade at the same strikes, but instead of expiring on January the 7th, I pushed it out by another couple of weeks to January the 21st. So I was able to get $189 credit for that trade, which was at a 0.32 delta for those who are interested. So therefore my total net credit was 189 minus the 164, which gives me a net credit of $25. So this is what I'm talking about rolling an option. So I'm buying back the option, and I'm selling to open a brand new credit spread position where the net credit is higher than the net debit that I paid to close the previous trade, and therefore giving me an overall net credit. So if we go back a slide, that is what I've done on every single trade. I've except the first one, which is what I opened. So on trade 2, I closed trade 1 and open a brand new trade with a net credit of 75. Trade 3, I closed trade 2 for net new credit, and trade 4, I closed trade 3 and open trade 4 for 25, which is exactly what we've gone through. And again, take a look at the link down below. If you guys, I go through these for all the other trades so you guys understand how this works. It's important, if you want to do a strategy like this, that you understand the concept of rolling options. So this is the first time I think I've picked the same strike price as before. All I've done is that I have pushed it out by a couple of weeks, and pushing out by a couple of weeks gives you more theta or time value, as theta is one of the option Greeks, and that $25 is pretty much time value that I've basically or extrinsic value as it's called, that I've collected through this particular option. So again, I've not made as much as I did on the previous trades, and this is because if we look at Tesla, so we've got the weekly chart of Tesla up, and I've in this green dotted line is my sell put. So basically, I don't want Tesla to go below my sell put, because then I will start losing money. But you can see what has happened over the last, since really since the beginning of December, is that Tesla has had two out of three losing weeks and went to a low of lows on this one, a low of $886. So I was in the money here at this low of like 886 at its lowest point. And as I said, if we switch over to the daily chart, you will see Tesla's has gapped up, has had two really good, or three consecutive up days, and this gap up. And the reason for this gap up, or firstly, the reason for this downtrend is the broader market sell-off that we've seen, and secondly, as I mentioned in the previous video, Elon Musk has been selling his shares. So because he owns a lot of Tesla shares, it's going to move the market into a downwards move. And um, on the 22nd, he announced, he tweeted that he's done selling his shares, and that's where you had this gap up, and have had two good buying days. So you've had people coming back into the market now and buying Tesla shares, and you don't have the downward pressure of Elon selling his shares, therefore has pushed the price back up. So at the moment, you can see we've closed at 1067. Uh, it may look like it's a lot higher than my strike price, but you can see here on a daily basis, if we look at the ATR over here, you can see here, Tesla has been moving, between 62 to $75 a day. So, we're now in the holiday season, but come, I think Wednesday the market opens again. I'm not too sure really, on Monday probably. It can move right back down in the money the very next day. So this is where I was starting to feel a bit uncomfortable, as you can imagine, at lows of 886, um, around the 886 level, where I only had a January the 7th expiration. So I tried to roll my position when it was around this area, for a net debit of $20-30, but the spread was too wide and the volatility was there. I think I could probably get around $70-80, but I didn't want to give back $70-80. And thankfully, Elon has stopped selling, and allowed me at somewhere in this bullish green bar. I was able to do my roll position for another couple of weeks. So again, 21st of January. So I've got about just under a month now until the next trade. So what I'm looking to do, if Tesla continues to rise, that option is going to be, my current option that I've got is going to be cheaper to roll, and I'll probably look to trail it up. Um, if Tesla moves sideways, then it could be a bit rocky. But if Tesla drops again, hopefully I've got 3-4 weeks on my side to give me enough time to then start doing a roll. So I'm going to leave it for another week, see how we get on for next week, and then decide what's the best course of action the week after. So I'm not hoping for another downward move. I'm actually hoping now to really go test these highs of 1243 at this level over here. So that's pretty much what's been going on with Tesla. I'm learning a lot following the chart now every single day to see how it moves, and hopefully I'll be able to pick better strike prices as time goes on. This isn't my most ideal strike price. Ideally, I want to be in the kind of 900s as my current strike price, because I want to give myself enough room for it to go down, which is kind of what I did in trade one really. But on trade one, when I was selling put options down here, as soon as that happened, Elon started to sell his shares, and I started this challenge on the day he started selling his shares, which probably wasn't the best day to kind of start. I should have started the day after, because then I would have had my put option around the 800 mark. But we are where we are, but I'm still making money. So this shows that even when stocks aren't going your way, you can still make money through the concept of time premium or theta, about rolling your option out. So I'm quite happy to roll my option out for 4 or 5 months if I need to, just to generate enough time premium so I can get a net credit, or I'm happy to take a debit to give back my profit to maintain the profit that I've already made. So, for me, I'm quite happy with where I am. As you can see here, 40% return, and hopefully I can get another, 10% or so, and hopefully I'll be halfway there in what's that, 11th, just over a month and a week. I started this challenge, so I really hope you enjoyed this video. I've got um, two more playlists on the screen for you now that hopefully you'll find useful, and I shall see you guys in the next video.